You're in at a good time. Back to you, buddy.
Thanks, mate. Yeah, so my theme for the next 2 to 3 weeks is that the US dollar is going to strengthen. I think you've got to be quite picky about where you demonstrate that. And it's also got to be on confirmation, right? This isn't just a willy-nilly, well, I'll just sell everything against, I'll buy the US dollar and sell every currency pair out there. Because obviously the US dollar is going to go up against everything. It might well do that, but I think we can do better than that. And so in my thinking that I have going on at the moment, I'm quite bearish against the euro. So euro dollar should probably head down, I think, again. I'm not quite sure about, I respect the attitude that it's sort of been going nowhere for some time. I think that's about to come to an end. To Paul's point, I think we're about to set off in a new direction. That may be up, but I don't think it will be. Like I said, I'd like to comment around the commitment of traders. There's a lot of talk around how the commitment of traders have significant commercial positions, which are short the euros along the US dollar, and the same way the dollar index has got quite a substantial long position as well too. Now, there's two aspects to this which I think need to be highlighted. Is that when the change in open interest correlates with those commitment of trader position reports, it produces incredibly powerful signals. When you have the open interest declining the way it is doing across a lot of these currencies, whilst showing a commercial position that's substantially dollar positive, US dollar positive, that probably is illustrating the fact that two things are going on. Number one is that activity is falling, sort of obvious because open interest is falling. But secondly, it may say that any reversal that does take place, so i.e. the US dollar does get bid up, euro goes down, dollar Swiss moves, dollar CAD goes up, you get the gist of this, right? Then those moves, those reaction moves might be muted simply because the amount of open interest out there is not sufficient to generate or to generate the what's the word I'm looking for, the wrongness of the positions, if you like, from the market to cause a substantial correction to take place. So whilst I'm dollar bullish, the question is, I'm not, the point I'm trying to make is I'm not super dollar bullish. We're not going back to 100 on the euro. I don't think we are. That would be interesting and highly entertaining, but I don't think that's going to happen. I expect a correction to take place, but maybe not as substantial as I was sort of illustrating about 3 or 4 weeks ago when I began to talk about this. So that's just something to bear in mind. Now, that having been said, let's go choose our poison, right? And the Aussie's trading pretty crappy, as Jeff and Paul have both pointed out. That may be a useful target to have a go at. Again, the euro, we talked about that one as being interesting. I think the Aussie is probably the weakest of the bunch this week. And so I'd be looking at that for trade. And again, a lot of people trade that Aussie Kiwi cross. And if the Kiwi's holding up, and they're going to sell the Aussie and yada, yada. Again, you get the gist of this, right? And how do we put these positions on? Well, we're looking for breaks and new lows. And, if there's any sort of reaction on the hourly charts or something like that, then maybe that just presents you with an opportunity to get a position off, so things like that. So you guys know how to position it with your tools. It's really about identifying what I think are going to be the interests for this week. I'm also quite bullish on dollar CAD as well too, as another alternative to the Aussie, just to spread the regional love around to move into the Americas as well too. For those of you that have an interest in some of the things that are going on, and to, I guess, again, to prove Alex's point, if you look at the fundamental news coming out of China has been incredibly bullish, and its currency moves have supported that. So that isn't a trade. Again, I'm recommending that you suddenly start, selling the dollar renminbi. I don't think that's the right idea. Buying it. I don't think that's the right idea. Because that currency pair has been strengthening clearly in China's favor for quite some time now as a result of the fact that they're out of COVID, but their economic situation is improving rapidly. And again, just looking at, I know there's a lot of the world sadly is still in lockdown. When you look at what's going on in New Zealand, and I had a chat today again with some friends of mine, I'm still trying to find somebody, ex the people who are in hospitality and airlines who isn't doing well at the moment. The economy seems to be rocking and rolling outside of the obvious sectors that are struggling. Even tourism seems to be doing a little bit better as well too. So, bear these things in mind, right? So when we scoot around stuff, and if I'm bullish on the dollar, then what does that mean for some of those other cross currency asset classes? Well, that probably means that I'm not that bullish on oil. This is a seasonally bearish time for oil. I know that nothing's happening, but the great thing about nothing happening is that it's gone back to the top of the trading range. maybe you've got to watch this like a hawk. I think I'll be looking for some kind of price action movement to get confirmation, and I think the down move in oil might continue. I could be wrong on this one, and I think you've got to hold close, tight stops on it. But I'm getting a little negative on the oil market for the similar reasons that I'm bullish on the US dollar. And I also think that extends to the gold market as well too. I know that I've been I've been waxing and waning about gold for weeks and weeks and weeks now. And I think some of this is my reticence to participate at the moment before the seasonal bullish time in Q1. And I've sort of been nervous about it. It's had its moments, and September is normally a little bit of a flip up time and a moment. But realistically, from sort of here on through to December is not the most bullish time for gold. It may change with the election. Again, who knows what's going to happen to stocks, and it might go up with stocks or it might go down with stocks, depending on what the direction is. These days, it seems to be quite highly correlated with stocks. So stocks go up, it does okay. Stocks go down, it does a bit crap. So just bear that in mind. But I'm not that bullish on gold at the moment, and we could see a break lower, I think, over the course of the next few days. Not necessarily a prediction. I need it confirmed by price action, but that's what I'll be looking for. And so we've got a relatively, that's my overall theme. My overall theme is US dollar positive, and consequently, as some of the asset markets, the commodity asset markets, a little bit negative. That does not mean to say I'm negative on stocks. We're coming into what essentially is the biggest seasonal bullish signal of the year in the last week, October, first week in November. Doesn't matter how you trade it, how you see it. Around that time, it's bullish. Doesn't really matter where we come from. The track record is pretty clear about this, especially leading up to the presidential election as well too. There's normally quite a seasonal bullishness, and I'd be taking buy signals if they occur. So this is really down to whatever method you're using, directional wise. I'd be thinking about the US stocks, and I have to pinch myself as well some days and say, really, you're going to buy it here? But it doesn't seem to be trading that badly overall, quite honestly. And if we get that level of uncertainty in the US economy and the US election coming through, and it's not trading that badly, what will it do when you have a US president actually get elected, whoever that might be? And again, interpreting that is sort of a matter of debate. But I suppose the best way to look at it is to say that Biden's probably good for overseas people that have exposure to the overseas markets, US companies that have exposure to the overseas markets, and Trump re-election would be good for those people who have a domestic exposure. So think Biden is China and US companies that have exposure in China, and Trump is US companies that have exposure in the US. I don't know, as a way to think about it. Paul, I think that's pretty much me. I've rabbited on for a little while. I hope people have got a fair sense of what I'm thinking at the moment. Especially around sterling and things like that. So again, I'm looking for medium-term opportunities there. Try and take trading signals where we get it for US sterling down. We're in the crux of the negotiations. Brexit negotiations should be coming to their conclusion. He says with an exclamation mark. It's only been 5 years. Sometime or other in the course of the next couple of weeks or so. Fingers crossed something turns out. But I think if something good does turn out, that trend will last for a number of days, if not weeks. That's it for me, Paul. Okay, so Paul seems to have taken a breather for a couple of seconds. Does anybody have any? That's all right. Does anybody have any questions they'd like to raise?
Look, if there are any questions, I've got nothing coming on YouTube. We're still having problems with the stream on Facebook. I've got nothing in YouTube as far as questions go. If there are any questions, we will ask you again. We'll give you a few seconds here to push them in. We are going to make someone asking us for our take or your take on dollar yen, Julian.
Yeah, great question. Thank you very much for that. The support. Okay, I'll get to the support in gold in a minute. The dollar yen should go down, and I don't understand why it isn't. It's the exception to the rule on my US dollar strength argument. Is the short answer to that question. And I'm sort of a big So the reason why I'm quite a big fan of the yen at the moment is because of the overseas purchases of JGBs that are going on. So the Europeans are selling them, and the Asians, especially the Chinese, are buying heap tons of JGBs. And I think that type of fundamental shift is really important from a market perspective. Just the volume of the flows into the yen is quite interesting. Now that may be because the Chinese are very worried about their own strengthening currency, and they're sort of like just gently trying to nudge it, which is a possibility. But I feel that whatever happens when things like that take place, the yen should probably benefit, and maybe that's going to continue to help strengthen it. My tolerance level is very low for this, above 106. I think it's a change of something or other, and I'm going to be out. So bear in mind that the way in which the dollar yen tends to trade is it will do nothing for a very long period of time and then go utterly, completely nuts. Hopefully it'll be down this time.
Sorry, Julian. JGB, Japanese government bonds.
I apologize, Paul. That's me talking trader speak again. Thank you very much for reminding me. Yes, that's the Japanese government bond is JGBs. So the Chinese government has been buying significant quantities of those. So if you look at the Chinese government's holdings of reserves, they fall into two extra categories of what they've been adding in the course of the last 18 months. So the add has been Japanese government bonds and gold. And what they've been selling is US bonds. Hold on a second. Let me look at gold and what we're thinking about with gold. If somebody could quickly flip a chart up, just a daily or even a weekly chart of gold, that would be awesome, guys.
Alexis, you okay to bring up a gold chart? And we've got a question from Dennis on the Euro GBP after this as well, if you've got time, Julian. I think the answer was a bit briefer.
So again, you can look at this gold chart. What's going on here is we had a triangle to end all triangles until it ended. But even then, all it did when it ended that triangle was to drift down to the major support level that was created by that triangle, that technical pattern. So what we've done now is we've gone back broadly to revisit the breakdown point. So this is pretty critical for me. So where I see a breakdown on the weekly chart of key support levels, so I think the last 2 or 3 weeks, where we start to see that, then I'm going to get concerned, right? And the gold should start to head lower. Now, where does it go down to? In my head, I'd love it to go down to the 1700 mark or the 1600 mark because I'd like to buy some more there. However, it's difficult to say, but actually those levels about 1700 isn't particularly stupid. That sounds utterly nuts if you think about it from where it is at the moment, but it's not nuts if you look at that technical pattern. Certainly 1800 would be a lock for me if it did begin to break down, and I'd like to see it a little bit lower into that congestion area around the 1700s. I hope that answers your question. But this is, gold is something you can look at weekly charts on and try and get a decent read of. Yep, and that actually measures sort of right from the move back up, the reaction move that we've just had now over the course of the last 10 weeks or so. So the last 10 days or so, 20 days. Cool. Thank you for that. Brilliant. Thank you very much, Alexis, for doing the editing there. That's fantastic. Dennis, Euro GDP all over the place now. This will be like this until Brexit over. Okay, well, is it all over the place? Could you possibly put a Euro sterling chart up for me on the dailies? Right, so so all over the place is a state of mind here, Dennis. So I don't consider that to be all over the place. Is that actually a daily chart or is that a period chart?
Daily chart.
Wow. Okay. Yeah. No, Dennis, that's going nowhere. So what's the actual range been? So we've had somewhere between 90 and 92 now for the past, I don't know, what, 4 or 5 weeks. So that's a 2 big figure range over 4 or 5 weeks. Pick at your argument there, Dennis, but actually I don't think that's all over the place. Yes, it may have looked intraday that there's been some volatility, but really when I'm looking for 15 big figures, then 1 or 2 big figures isn't really a big movement to me. So I actually think it's been quite quiet. That to me suggests that, so think about this a different way. What positions do people have on here? Right? When you look at that chart in the world of going up, going down, what's going on, right? Is it likely more to go up or more to go down? Well, I think you can argue that for the last 2 weeks, it's been a little confused about what it's trying to do. That I will grant you, Dennis. And it has lots of tails all over the place and clearly lots of noise coming out of politicians, which is the market's been knee jerking to. But I don't see right now that there's tremendous positioning. If anything, I say people are probably slightly long, slightly biased towards the euro. But that we've spent way too long consolidating, and that breakup we had about a month ago in early September has just not followed through, right? So it went up and then it stopped stone dead. And more importantly, not only to stop stone dead, it's now retraced about 2/3 of that. That's not necessarily a bullish thing. It may well go up from here. Anything can happen, but it doesn't trade. It trades heavy, right? My interpretation of the chart as I see it right now. And I also think people are in different positioning wise. Now, what does that mean? That means that if it does start to go down, nobody will have the position on, which means it'll probably go quite quickly. So just bear in mind. So work out if it's going to go down, where's it going to go down from, to give you a sense of, I need a bit of certainty here. We'd all love for it to go up, make a new high, and then completely reverse and go straight down. That would be fantastic. Life doesn't often work that way. So maybe we have to trade it as though if it keeps continuing to go down, because why is this correction that's been going on for the last 3 weeks been going on for the last 3 weeks, right? That just says to me that there's just nothing, in terms of positioning, people are just scared. And that means that also they don't have anything on. And so when this market does move, it may be quite explosive, especially if it went in the other direction. I think that would be the surprise trade at the moment. So down would be surprise, up would probably be what people are probably thinking about. So if they're going to be surprised and it goes in line with what my thinking is, then I suspect it'll move quite quickly. But it'll be a tough one for you to sell, right? So if you said to me, okay, hell, I've got to sell 90.00 because I think it's going to go down to 78, then that's a tough trade as things stand today, because you'd end up, you're worrying about selling the low, and it really is only a trading range. I get it. So in that case, then wait till we get an edge. What's our edge? Our edge is if the market starts to move, then we can jump all over it, right? So do it that way. But there doesn't appear to be a lot of pre-positioning right now. Hope that helps. Yeah, I do get your point. Just remember, Dennis, that it does change a lot, and there is a lot of Brexit news out. And I was with the euro sterling trade. It sort of happens. It's a bit of life, really. And these things are going to happen. Where you and I, neither of us, Dennis, probably have much of an edge on what's going on with the Brexit news right now. Neither of us are working in the UK government or the European negotiating team. So in that case, maybe it's just better, given the way the markets are positioned right now, to think about jumping on board once we see something start to break out, because it will go quick. And I think we need to be part of that journey when it does. I hope that helps, Dennis. Any other questions from anybody?
Right, if we've got no more questions, we will start and move along. Thank you very much.